Hello traders, this is Rich Derrick from Tradesight. This is the evening market preview for this coming trading session. That's going to be for Thursday, March 28th, 2013. The current session was one where we had a pretty substantial gap down in the morning on some news, but the bulls were able to kind of recover that drop and walk things all the way back up to about unchanged on the day. The ES closed within shooting distance of the prior settlement. NQs are a little higher on the day. The only thing that was a little bit soft was the Dow Industrials, which were down about 33 points on the day. So really no damage done. They did fill that gap, which is, depending on whether you want to look at it glass half full or glass half empty, technically is either a good thing or a bad thing. That means there's no overhead gap open at range high, so the bears can come in and sell it tomorrow if they so choose. But really haven't seen too many bears, though we're still on the watch just in case we start to see some activity. Internally also, the market was fairly flat. We opened up with some very negative internals. The VIX was up quite a bit. The advanced declines were very negative, but they were able to kind of settle that down. We closed with positive advanced declines actually on the New York side, and only very slightly negative ones on the NQ side. Another key feature that we saw early on in the day was the fact that the real aggressive risk-off environment wasn't really there. Oil was down in the morning a little bit, but recovered. Gold never really got a good bid to it, and while the bonds, the government bonds that is, were up on the day, we never really saw just an absolute rush to take risk off and to start accumulating more defensive positions. So let's take a look at the current technicals on the major charts. All right, so here's a look at the ES futures. You can see by the design of the real body here, we opened down fairly low on the day, recouped and closed about unchanged. The key thing is we're still grinding above the risk level here from the seeker exhaustion sell signal, and this is really important to know where it is on the chart. A lot of people don't have access to this, and it really does make for very important levels that are not really readily available to a lot of people. Still using this area here as resistance. We touched it today, didn't break through it, so the exhaustion warning is still there. Just really haven't been able to activate it with a roll down yet, and make the exhaustion warning a sell signal, but that could easily happen in just a session or two. So be on guard for that. We're still above the 10 EMA, and of course the two other major EMAs. Moving averages, the 50 and the 200 here, so technically still healthy, but desperately in need of a correction if they so choose. The NQ futures still remain with their relative weakness. The NQ futures are still staging below this 8-ace level, which is key resistance. If they can break this out above this area, obviously this area has been very well traded and is wound up with energy, so it's not overbought. It just doesn't have any oomph to it and no real positive momentum. You can see the MACD is just completely just dead. It's almost like a flat line. So for now, still lateral here and basically neutral. The bulls were able to recoup that gap down this morning and close it about unchanged on the day. 28.1250 remains the line in the sand for the bulls. Bright point for the long side of the tape here is that the cumulative advanced decline on the New York Stock Exchange remains positive, and still kind of attempting to grind out new highs. The negative is that NASDAQ is still relatively weak and still really unable to get any positive momentum going. So since NASDAQ usually leads the broad market, this is a cause for concern. But what we really have to do is just keep our eyes open to see if we start to get a rollover here in the New York Stock Exchange side of it, which hasn't happened yet. Put call ratio creeped up a little bit higher, but did not record any kind of a climactic reading. So we're still basically neutral there. The New York Stock Exchange trend, or the ARMS index, was up at 1.2 today on the close, 1.2, but it really didn't do anything to expand this move to the upside here. So we haven't really gotten up into that 1.35 oversold area. So right now it's basically still neutral with just maybe just a tiny bit of overbought energy remaining in the market. But for now, I'd really characterize this as pretty much just dead neutral. NDX versus the SOX was obviously pretty flat on the day with very little change, so no real movement there. All right, the TLT SPX cross took a little bit of a hit today because the government bonds represented by the TLT was relatively strong versus the S&P, and TLT being on the bottom of the fraction brought the ratio down a little bit, but it's still got a good distance here before we get to this this level that had been pretty much where that risk-off posturing had kind of terminated in all the previous moves. We've done 2 touches here now in the channel. Haven't quite gotten there yet. If we do, that's definitely going to be something that you want to be aware of and potentially looking in for longs. But we're not quite there yet. But we'll keep our eyes open on this one. Here's the SOX versus the NDX. Gained maybe just a little bit of ground here today. Really didn't do too much. We're still kind of just flatlining here below this key level on the weekly chart. That was the breakdown where we really picked up some negative strength in the SOX. But for now, still just kind of flat here. Not able to get above this key level. So still watching it, but not seeing that decisive breakout just yet. All right, now here's I haven't looked at this chart in a while, but here's the BKX represented by the blue line, and the S&P is the red line. What we're taking a look, we're looking at this as a comparison here of the relative strength of the S&P versus the banking index, the BKX. Typically, what you want to see is you want to see the BKX leading until you get late in the cycle. If you get late in the cycle, where a trend has run fairly far, what you will find oftentimes is you'll start to see a rotation out of the banks and into the late cycle stocks. That'll be the transportations, the energies, and some of those other late cycle performers. We can have a little bit of a rotation and a rollover here in the BKX and still have a healthy market as long as that rotation is happening. Rotation out of the early performing stocks like the banks and into those later performing stocks, transportations, the energies, the drillers and whatnot. But we want to make sure that now that we're starting to see a little bit of a rollover here in the BKX, we want to make sure that we do see a positive rotation into those late cycle performers. If we do not see that, that is a very bearish signal here. So next couple of days we're going to keep a close track on this and make sure that we do see that performance. Otherwise we're going to see the banks carry the S&P or the broad market lower. Right now it's okay as long as those other sectors come on. Okay, here's the interesting chart. This is the let me move my label. This is the multi-sector daily chart. We saw some decent performance in some of the sectors. We did see some weakness in the BKX. You can see that the BKX, which is the green line, started to show some weakness. The other major sectors were okay. The SOX traded fairly well today, and the BTK was fairly strong. But we also saw the XAU higher on the day. So we've got to make sure that we're not seeing a rotation out of the growth-oriented stocks into the defensive ones. If we start to see the SOX and also the BTK start to roll down, then we're going to be a little bit concerned here. We're definitely going to be playing the XAU a little bit more aggressively on the long side. We did have a nice long in the XAU today over the opening range high. Just preying on the overall oversold condition of the XAU and the possibility for some more risk-off trading. Didn't really materialize into a long-standing trade today, but that's fine. Just want to be able to participate in the bumps in these little lifts off of this oversold condition in the XAU. All right, and here's a look at the major sectors that we follow. For those who are a little bit new to eSignal, let me just show you one of my little tricks here. What I like to do is, if you want to sort it and get an idea of what the best performance was, if you double click on the percent change, it will sort by the percentage change. Right now it's sorted from worst to best. I'm just going to double click it again, and we're going to see the best performer on the top, which was the XAU on the day. And then it leaves the laggers behind, which is I like to sort it this way at the end of the day, just to kind of get a better idea of where the strength was and where the weakness was. So today we saw the XAU performing well, the BTK and the OSX. Fine. The BKX was the last lagger today, down about 0.5%. So and the consumer and the drugs were kind of taking a breather. A little bit concerned here that the XOY didn't perform nearly as well as the OSX. We'd like to see them trade a little bit more in lockstep to have a more linear move develop, but want to make sure that doesn't turn into a lasting divergence. And if it does, we're going to have a little bit of a problem here in the overall market. Like we talked about before, the banks can be weak, but we need to see those later cycle things come on. We really need to see good performance out of the entire energy sector. We need to see a better performance out of the transportations. The transports right now we're basically fine on the day. But if the banks are going to show weakness, we really need to see the rotation into those late cycles and not into the defensive sectors like the XAU, or into a different asset class altogether like fixed income. All right, here's a look at the XAU. Play this long, that was fine. We've got positive MACD. Going to continue to look at these long. Definitely be aware of this high water mark right here, 138.37, which represents the high of this trading range. If we get above there, that's going to put the 50 DMA in play. And with the oversold condition of these and the way that these stocks have been kind of abandoned, this chart could get there very, very quickly. So definitely keep your eye on that, and if you see that breakout, definitely be ready to put on some long trades, and make sure you have some longs available. RGLD, Double G, Newmont. Make sure you're aware of what all those charts look like and be ready to go to those. Here's the BTK, which had a very, very strong day in light of the general just sloppy trading overall in the market. Sprinted up here and just about matched the high close. This is actually the second highest close of the move. This plus 1/8 level, 1812.50, is going to be really important because it'll break it to a new high on the move. This little lateral range that we've been in is still intact for now. Definitely holding above 8/8, which is positive. The only cause for concern here is the MACD starting to roll over, but the CCI is starting to turn up here and potentially move back up. So still range bound. There's maybe just a tiny bit of energy in the CCI here to be released to the upside here. That was just kind of just loaded in as we went sideways here in that consolidation. You can see as we were consolidating here sideways, the CCI was on the downside. And I use the CCI as just kind of that's the commodity channel indicator. I like to use that as just kind of a short-term overbought, oversold indicator. And right now it's moving from an area where it had been consolidating and starting to curl back up to the upside here, which is at least short-term positive because it's not anywhere near these overbought levels. Once you get up around 200 or over 200, that's when you start to get overbought in the CCI. Stocks had a positive day, traded a new low, closed above yesterday's high, so that's definitely a positive. But we're still lateral here. We're below 8/8, and we're still below the risk level here from the seeker. The seeker exhaustion signal is still in effect, but it's starting to look like it doesn't want to release to the downside. But I'm not going to time it out until we get to at least 9 candles after the confirmation, which was here. So this is 1, 2, 3, 4, 5, 6. So we got 3 more candles before we start to really think that this signal is suspect. And moving on to the BKX, which was the worst performer on the day. Surprisingly, closed right at the 8/8 level, 56.25. So we're essentially short-term negative, but really have not gathered any downside momentum. The MACD is negative, but really hasn't developed any real momentum to the downside here. We haven't even gotten close to that zero line. That break on the zero line is when you tend to get the real release of negative energy. If you look back to this prior little sell-off here, the MACD rolled down to the zero line, but found support there and the charts started turning back positive, and the CCI and the MACD never got below that zero line where you really get that release of energy in that downward momentum. All right, now speaking of momentum, here are the oil futures. We had this this breakout above this previous range, and we got a breakout above the zero line in the MACD. So this is actually starting to gather momentum to the upside now, and it's going to put this static trend line in play here that we want to be aware of, about 97.5. So 97.5 is a key trade to target here in the oil futures, which do have upside momentum right now. And gold was, okay. The MACD is curling back up from oversold. We've got a positive indication here, but just like we were talking about before, we have not had that break above the zero line where we can really start gathering some upside momentum. Looking at this chart, you can tell there's really no upside momentum that's been put to work just yet by the bulls. All right, folks, so that's going to be it for today. As always, thanks for listening. This has been Rich Derrick for Tradesight.